Now, that trader then rubs his or her hands with glee as it moves into profit, and then starts to develop sweaty hands when price comes back down below. And it comes down below, so that trader is now underwater and is losing money, and will have set, no doubt, a stop just underneath the consolidation low that got the trader in. Price then finds its way down with a neat little trick that happens in the markets all the time, which is called stop hunting, and this candle picked out those stops which were just underneath the consolidation, including our hapless trader who got in and has now taken a loss. Price then moves on back up, and at that level, and saying, well, we've now got the big pullback, and we'll then buy again at those highs, only to find that exactly the same thing happens again. So there we are. Now that's the wrong way to do it, and let's relate this back to the shopkeeper, who, let's say that the shopkeeper is selling beds. How about beds? Now, price of a bed, well, I suppose you could spend more or less any sort of money on it, but let's suggest that it's a £500 bed retail, and that's the sort of money that people in his shop are prepared to pay. He goes to various wholesalers, and what he can actually find is that he can find a bed which he can buy for £450, leaving him a 10% profit. By the time the customer has haggled, who wants a 10% discount, but they settle on maybe a 5% discount, and the customer actually wants a few legs for the bed as well, and he wants those to be thrown in, the poor old shopkeeper is not going to make any money on it. So what that shopkeeper needs to do, he or she needs to find a source of supply which is considerably less than £500. Wants to be finding a source of supply which is no more than around about £200, so that that shopkeeper can make a sensible profit on the trade. And it's just the same with trading. We've got to get in at the right place. We've got to buy right, and buying right is not waiting and waiting and waiting forever for confirmation, because every 10 pips that we wait for confirmation, we are reducing our profit by 10 pips, and we are increasing our risk by 10 pips. So the thing to do is to realize what is going on with a pattern such as this, and we want to buy right at these lows, or at least we want to buy in this pattern after we've got some bullish candles. Now we've got a bullish candle right the way back here. We've got another one as price moves up. We've got another one here, and we've got yet another one here. So the buying area is going to be in this zone, in this region. And the perfect buy is after the breakout, there is an initial pullback. It pulls right the way back very neatly and so often to one of these lines, and it then leaves behind a bullish candle. So the ideal entry is either somewhere within this pattern with a stop below, or indeed we wait for the very first breakout and pullback, and the buy is just there with an initial stop which we're going to put just underneath. So we end up with an entry which is going to give us a very small stop loss, and it then enables us to actually get out of this trade more or less anywhere on this move up with a profit. Yeah, we'll come over to the Jappy in just a second. So by buying right, we're relaxed. We don't suffer from sweaty palms. The market can do whatever the market wants to do. We can then get our stop loss into break even. So as price moves up, we can move our stop to the break even level, which is just under the last reaction low, and we can just run it on up. So as price subsequently goes higher beyond the next consolidation, we can just bring our stops up, and that now moves into a stop profit situation. And for those of us who take partial profits along the way, then we've got plenty of areas where we can take maybe half or a third or two-thirds of profit, and we can be sitting pretty with having taken a profit and then keep a part of the position still running. We then get a reversal on down, and the whole thing changes, and our stop will be taken out, and we can then just walk away from it and wait and wait and do what traders, this is the most difficult thing for traders to learn: waiting. Waiting. We wait until we get our next neat, nice, tidy setup, which might be as neat and tidy as this previous one just over here. We've got to avoid the frustration of feeling that we just must jump into every possible trade which is running, and we've got to wait for the best setups. Right, guys, well, that, Boyke, I hope that answers the question there. How does trading relate to shopkeeping? You've got to wait for the attractive setup, and what we've got to then do, we've got to buy at the right place. If we were fast asleep at that time, and depending upon where you are in the world, you may well have been fast asleep when that setup kicked off. And if we sort of come in an hour later to try and put the trade on, we've got to resist it. We've just got to resist. We've got to tell ourselves, just sit tight and wait. Because like Confucius said, it all comes to he or she who waits. Right, that's lesson number 1, guys. Right, let's move on then to lesson number 2. And lesson number 2 is a rule about crossing the road. I think we're going to switch over. We'll look at the Jappy in a minute, but let's just switch over to the Aussie. Ooh, can you bear with me half a moment? Right, back with you guys. Apologies for that. Right, now, the Aussie dollar is a very good charting market, and it's a very good Fibonacci market. What I just want to focus on is a nice little setup that came yesterday. We're looking at the hourly chart. Now, traders and people crossing the road, well, what on earth can they have in common? Right, well, anyone crossing a road is in severe danger. They are at risk of being run over. Traders are in severe danger. It is entirely possible to wipe our account out, and more. And it can be done very, very easily. It can be done as quickly and easily as just stepping off the pavement to cross the road. So, a very clever chap came up with a green cross code for crossing the road, and may well have been probably not a chap, actually, I can't quite remember who it was, but it was taught to our children to look right, look left, and look right again. Now that applies in the UK, but if you're in the States, we've got to reverse it round, and you've got to look left, look right, and look left again. And for traders, that's the one that I like. I like the US version, where people drive on the right. The sensible thing to do is to look left, look right, and look left again.